Good morning, students. Welcome you all once again in the next asset-based standard. And today we are going to discuss Ind AS 38 intangible assets. So last time we have discussed tangible assets, which is property, plant, and equipment. And today we are going to discuss intangible assets. Right. So friends, if I talk about three standards, Ind AS 16, Ind AS 38, and Ind AS 40. 16 talks about tangible asset, which is property, plant, and equipment. 38 talks about intangible assets, and 40 talks about investment property. First of all, among these three standards, these three standards are very important, and you can expect one or two questions among these three standards, right? So what could be the sequence of learning? The sequence of learning could be your Ind AS 16 should be taken at first, then you should take Ind AS 38, and then you should take Ind AS 40. So this should be the sequence of learning, right? Why? Because you already have learned Ind AS 16, and 40 to 50% concept of Ind AS 16 has been replicated into Ind AS 38. For example, in Ind AS 16, you have understood the revaluation model and cost model. The same concept is there with some changes. The same concept is there in Ind AS 38 intangible asset as well. Deferred payment credit, you have understood in Ind AS 16. Exchange of assets, you have understood in Ind AS 16. So same concept is there in Ind AS 38 as well, right? If I'm coming to cost model of Ind AS 16, that cost model is same as in Ind AS 40 investment property. So your sequence of learning should be Ind AS 16, you should take first, then Ind AS 38, then Ind AS 40. So this is the better way to read these particular standards. And these standard will help you. For example, when you complete Ind AS 16 and when you will start Ind AS 38, so you will have some sort of revision of Ind AS 16 itself while reading Ind AS 38, right? So even though when you are first time reading this standard, it will also help you in revising the old standard, revising the last standard, right? So let's come to the today's agenda. If I talk about Ind AS 38 intangible assets, so first of all, I'll discuss what are the standards which are available for intangible assets. In accounting standard, we have AS 26. In accounting standard, we have AS 26, which you all have known that AS 26 is a very old standard which is applicable in India for intangible assets, right? But these accounting standards are applicable to non-corporate entities and some sort of corporate entities where Ind AS is not applicable due to net worth criteria or due to unlisted criteria, right? And our agenda is Ind AS 38, right? And if you have taken a GFRS paper, in that case, the global standard GFRS is on IFRS, right? So globally, which standard is there on intangible asset? It is IAS 38. In India, AS 26 is there, Ind AS 38 is there, and globally IAS 38 is there. Is there any difference between Ind AS 38 and IAS 38? There is no major difference between Ind AS 38 and IAS 38. So if you are learning Ind AS 38, just you have to remove ND and you will have a preparation of GFRS IAS 38 as well, right? I hope my voice is clear to everyone. I hope you all are comfortable so far. Whomsoever have joined the live session, I hope my voice is clear to everyone. Yeah, great. So guys, as far as agenda is concerned, first of all, what could be the intangible asset? Just I need to discuss. What is the intangible asset? Because you all must have completed your 1 year or 2 year of articleship. So what could be the intangible asset? Any famous intangible asset which is there in almost every balance sheet? When you guys went to the client, must be you are extracting the trial balance. So probably the client is using ERP. Probably the client is using SAP. Probably the client is using Tally software, BG software, right? For maintaining their books of accounts, right? For maintaining their financial records. So what could be the classic example of intangible asset? The classic example of intangible asset is software. It is software, right? And you have seen this software in almost every balance sheet, right? Software. What could be the other examples of intangible assets? What could be the other examples of intangible asset? Goodwill. Okay. There could be a goodwill in the balance sheet. Okay. If you see the financial statement of Infosys, you will find a goodwill, right? What could be the other example? Trademark, copyright, patent, okay, license. Like if you see the balance sheet of telecom companies, the major chunk is intangible asset in terms of spectrum license. If you see the balance sheet of Bharti Airtel, Reliance Jio Infocom, Vodafone Idea Limited, you will find a line item as a license. What is that license? Spectrum license to operate in some geography, to continue the telecom services, to provide the telecom services. Spectrum licenses, right? So what are these rights? What are these licenses? These are intangible assets. Now I'll ask one question. SAP is a company. If SAP is selling SAP software like Finacle, whether it is intangible asset for SAP or is it inventory for SAP Limited? What is that? Yes, you're right, Utkarsh. It is inventory for SAP, right? But if Maruti is buying, or Maruti has ordered SAP Limited to install SAP in Maruti, so this SAP software in Maruti is inventory or intangible asset? Yeah, yes, it is intangible asset in the books of Maruti, because Maruti's ordinary course of business is not to sell softwares. Maruti's ordinary course of business is to sell Maruti. So this is an intangible asset for Maruti, but for Infosys, TCS, or SAP, it is an inventory, right? It is an inventory. I hope you guys are clear. Yeah, yeah, good, Srinidhi. Yes. So you all have a aerial view of what is intangible asset and how is it different from tangible asset. Tangible asset is something which we can see, right? For example, building, you can see building, you can touch building, you can feel building. But as far as intangible asset is concerned, we cannot see intangible asset. We can just feel the future economic benefit, or we can just realize the benefit of that intangible asset, but we cannot see the intangible asset. We cannot touch the intangible assets, right? And that is why the accounting of intangible asset becomes very important, right? Because this is something which you cannot see. This is something which you cannot touch, right? Which you cannot feel. So that is why the accounting of intangible asset becomes very important. And when I say that intangible asset accounting is very important, so very important is to identify whether that resource, whether that intangible resource is an intangible asset or not. Mind my word, I'm saying intangible resource. Okay, so that is a resource, that is an intangible resource, but is it an intangible asset? So we'll discuss later on, right? So friends, and if practically speaking, this is one of the most ignored area, practically speaking. If you see the balance sheet of multiple companies, for example, Ultratech Cement, right? You will find that around 15% of the entire balance sheet consists of intangible asset. Big number. They have mining rights, right? They have a mining rights, they have softwares. If you see the balance sheet of Infosys Limited, you will find intangible asset to the tune of close to 7,000 or 7,500 crores. Big number. They have research and development assets. If you see the pharma companies, you will find majority intangible assets in terms of patent, copyright, right? If you will see the balance sheet of Saregama Limited, you will find intangible asset in terms of music rights, right? So these are the intangible assets. If you see the balance sheet of Adani, if you see the balance sheet of Reliance, you will find a huge amount of intangible asset there, right? So intangible assets, although in some companies it becomes a major chunk of the entire asset, but still it is a very ignored area, because intangible asset is something which you cannot see, you cannot touch. So people think that, okay, whatever accounting is given, just we have to continue with that accounting. So people are less focusing on accounting and recording of intangible asset. But yes, it is very, very, very important area. And at times, intangible provides more benefit than tangible asset. Have you seen these loss-making companies? Have you seen these loss-making companies, Swiggy, Zomato, Paytm, right? These all are loss-making companies, Grofers. But have you seen the Flipkart? Have you seen the valuations of these companies? Have you seen the valuations of these companies? Flipkart, the valuation of Flipkart is even more than 1 lakh crore. Yeah, Walmart has invested 51% in Flipkart. So the valuation is more than 1 lakh crore. And it is a loss-making company. They don't have tangible net worth of 1 lakh crore, but their valuation is more than 1 lakh crore. So what is that which is increasing their valuation? Is it tangible asset? They don't have the tangible asset. They don't have the tangible asset to the tune of this much amount. So what is that which is increasing their value? Why companies are paying extra for buying stake in these companies? Why investors is paying extra? Srinidhi, Jay, Priya, Utkarsh, Megha. So what could be the reason? The company has a tangible net worth, or let's say the company has a tangible assets of, let's say, 20,000 crores, but the valuation is 1 lakh crore. Investors are paying 1 lakh crore. Why? Yes, just because of future economic benefit, just because of there are some intangible asset. These investors are recognizing goodwill. These investors are recognizing some other intangible asset because they are foreseeing some future economic benefit that will flow to them, right? Understood? Great. So coming to the agenda of the standard, first of all, like every standard, we will discuss what is the objective of this standard, why this standard, what is the scope of this standard, right? Then we will talk about the definition of intangible asset, which is utmost important, right? What is intangible asset? And the definition is very important. Then we'll talk about when an intangible resource will recognize as an intangible asset. We'll talk about the recognition criteria. Then we will talk about initial recognition and measurement. When initially you're recognizing your intangible asset, what is the initial measurement? What is the initial measurement? You will recognize mode of intangible asset, and that is very important. That how these intangible assets can be acquired. First, there could be by way of separate acquisition. You go and buy the intangible asset. For example, you went to Tally and buy the Tally software, right? You went to Oracle and buy the ERP, right? Second, a company is buying another company. For example, Sun Pharma buys stake in Renvexi. Okay, so by acquiring another company, this company will have a right for generic medicine. This company will have a formula, patent, technology of that company which this company can use. So by acquisition, some intangible assets are getting into, right? Exchange of assets. So the company is exchanging its non-monetary assets in acquisition of intangible assets, right? So intangible asset can be acquired by way of exchange of assets. Fourth could be internally generated intangible assets. For example, pharma companies. Just 2 years ago, a lot of pharma companies were busy in inventing the COVID vaccine. So they have done a huge amount of research and development, right? So what is that? So internally what they were spending, and once their formula becomes success, it becomes a hit, right? So when it becomes a success, it becomes, this formula will be patented and it will become an intangible asset, right? So internally generated intangible asset. Intangible asset acquired by way of government grant. For example, operating into a remote area, sometimes government is providing some rights free of cost. For example, airport landing rights. For example, government is providing mining rights free of cost or at a concessional rate. So this is again a mode of acquisition of intangible asset by way of government grant. So we'll discuss these concepts one by one, and these concepts are really very important. Then we will talk about subsequent recognition, that once you have recognized an intangible asset, once you have measured an intangible asset, it is there in your books of accounts, then at the reporting date, what will happen? So of course, on the reporting date, either you have to apply a cost model or you have to apply a revaluation model, right? Cost model, or you have to apply a revaluation model. Okay, so you have to amortize your intangible asset. Remember, we have used the word depreciation for PPE. Now we have to use the word, we have to use the word amortization for intangible assets, right? Amortization for intangible assets. Clear? Then we will also check for impairment. Okay. Then we will discuss amortization and useful life of intangible assets. Friends, this concept is very important. This concept is very important. Useful life. Useful life of intangible asset is of course finite, and it could be indefinite as well. We will discuss this concept, but useful life could be indefinite. Please mind my word, right? Then the last one is of course disclosure, which is a theoretical part, and it is not expected in your examination. I hope the agenda is clear to everyone. First, we'll discuss the objective, then what is there in this particular standard. Then we'll talk about the definition of intangible asset. Then we will talk about the recognition criteria. We'll talk about initial recognition and measurement. Then we will talk about the mode of acquisition of intangible asset. Then we'll talk about subsequent recognition in terms of cost model, revaluation model, amortization, impairment, and useful life of intangible asset. This is the entire agenda of the standard. Just giving you comfort, the 30-40% of standard is same, which we have already read, already understood in Ind AS 16 property, plant and equipment. With this, let's start. Coming to the objective, of course, the standard prescribe the accounting treatment. Accounting treatment of what? Accounting treatment for intangible asset, which are not dealt in another standard, right? Financial asset. What is financial asset? Again, in terms of substance, it is an intangible asset. But is it covered under Ind AS 38? Answer is no. That financial asset is covered under Ind AS 109, Ind AS 32, right? Infosys Limited is selling software. Tally is selling software. So whether these software are intangible asset, answer is yes. But is it covered under Ind AS 38? Answer is no. Why? Because for Tally, for Infosys, these are inventory, and inventories are covered under Ind AS 2, right? So first you need to see this standard only prescribe the accounting treatment for those intangible assets which are covered under this particular standard, right? If intangible asset is inventory for a particular company, so that company will apply Ind AS 2. That company will not apply Ind AS 38 for those inventories, right? Recognition criteria, of course, the standard also talks about recognition criteria, which is very important. This standard also talks about the determination of carrying amount, how carrying amount will be determined. When I say carrying amount means amount at which the intangible asset has to be carried down, has to be carried in the balance sheet, right? So what could be the carrying amount? Your cost minus accumulated amortization minus accumulated impairment. So friends, I'll use the word amortization here. There are three names of depreciation. One is depreciation. The second one is amortization. The third one is depletion. Depreciation is used for tangible asset. Amortization is used for intangible asset. Depletion is used for mining assets, right? Mining, M-I-N-I-N-G, mining assets. Then of course, the standard also talks about the disclosures. Coming to the scope, this standard shall apply in accounting for intangible assets, except. So there are some negative lists. Except those lists, all the intangible asset comes under the kitty of Ind AS 38. This is a residual standard, right? Financial asset, of course, by substance, it is an intangible asset. Investment, you have invested 50 lakh rupees in mutual fund and you will have dividend, you will have appreciation. So can you see the mutual fund? Of course, you can see a piece of paper, right? You can see a piece of paper. So it is in the form of an intangible asset, okay? But it is in the form of intangible asset, but it is not covered under Ind AS 38. Why? Because it is covered under Ind AS 32. There is a specific standard which talks about financial assets. Exploration and evaluation assets. expenditure on the development and extraction of minerals, oil, natural gas, and similar resources. So friends, what is exploration and evaluation assets? For example, government has given a mining rights to Ultratech Cement, right? So what Ultratech Cement will do? Ultratech Cement will excavate the mines, okay? Will excavate the mines and will dig out the ores, mining ores, right? Minerals, right? So these extraction of ores is known as exploration and evaluation assets. Like for example, if Ultratech Cement got a mining right, got a excavation rights for a coal mines, right? For a coal mines, when they are digging out a coal and they are just storing a coal, okay, outside into a ground or into a plain area, so you will see the mountain of coals, right? What is that? That is exploration and evaluation assets, right? So if a company is getting some right to extract these ores, to excavate, to extract, okay, so these rights are covered under Ind AS 38, but these ores, these exploration and evaluation asset, these extraction activity, okay, these evaluation activity is not covered under Ind AS 38, will be covered under Ind AS 106. Have you understood? First of all, I got a right, I got a license, okay. So when I got a right, when I got a license, it is intangible asset under Ind AS 38. When I went at that place, when I excavate that place, when I dig out this ores, these minerals, okay, so and store it into area, so this activity, this extraction, this dig out, this ores is known as exploration and evaluation assets, right? And expenditure on the development and extraction of minerals, oil, natural gas, and similar resources are also not covered under this standard because it is covered under Ind AS 106. Have you got it? Have you got this? So when I got a right, this right is covered under Ind AS 38, but the activity is not covered under Ind AS 38. Jay, Sairam, Srinidhi, Priya, Utkars, Megha, I hope it is clear to everyone. Yeah, good. Intangible asset arising from insurance contract by insurance companies. Again, it is covered under Ind AS 104 and hence it is not covered under Ind AS 38. Intangible asset covered by another standard such as intangible asset held for sale, right? For example, you all have heard about Reliance Communication Limited. Reliance Communication Limited, 3-4 years back, you must heard a news that Reliance Communication wants to sell the spectrum license to Reliance Jio, right? So when an entity, it is a non-monetary asset, and when an entity wants to sell an intangible asset, it will be classified as held for sale. I'm not talking about those entities whose business is to sell intangible asset. I am talking about those entities whose business is not to sell the intangible asset, but they are selling the intangible asset, like they are selling a PPE, right? So whose business is not to sell the intangible asset, right? So like Reliance Communication business is not to sell the spectrum license. They have acquired the spectrum license for rendering the telecom services, right? But they become bankrupt, they become insolvent. So that is why they want to sell these assets, right? So once when they want to sell these assets, it will be classified as held for sale, right? Deferred tax assets. Again, it is an intangible asset, but it is covered under Ind AS 12. Lease assets, it is covered under Ind AS 116. Asset arising from employee benefit, it is covered under Ind AS 19. Goodwill arising from business combination. When a company is acquiring another company and they have a goodwill, right? Why? Because they have paid 100 rupees for acquiring this company and the value of the net assets is 80 rupees. So this 20 rupees is goodwill arising in the business combination, right? Held by an entity for sale in the ordinary course of business, which is covered under Ind AS 2, right? Asset arising from contract with customers. It is covered under Ind AS 115. So in case of these kind of assets, Ind AS 38 is not applicable. For all other intangible assets, Ind AS 38 will be applicable, right? So this is just a scope part. This is a theoretical part. You may not expect the question from this part in the examination, but yes, it is important to understand that if these things are covered under different Ind AS, it will not be covered under Ind AS 38, right? Now, friends, let's understand the definition of intangible asset. Okay. So before understanding the definition of intangible asset, we need to understand the definition of an asset. And I hope my Excel file is visible to everyone. I hope my Excel file is visible to everyone. Just a minute, I'm facing some problem and I'm not able to scroll or move this. Yeah. So friends, what is the definition of an asset? You all have read this definition since class 11. So I want to understand what is the definition of an asset. What is the definition of an asset? Guys. What is the definition of an asset? Yeah. Yes. Intangible assets. What is the definition of asset? In Ind AS 38, we have discussed the objective part, right? We have discussed the objective part. We have discussed the scope part. Okay. Now we are talking about the definition. So I was asking what is the definition of intangible asset? But before asking the definition of an intangible asset, I want to understand the definition of an asset. What is meant by asset? What is meant by asset? Friends, what is meant by asset? Asset is a, what is meant by asset? Asset is a resource. Asset is a resource controlled. Asset is a resource controlled by an entity. Asset is a resource controlled by an entity. Asset is a resource controlled by an entity as a result of past event, as a result of past events resulting in future economic benefit, right? Future economic benefit. Is this the definition of an asset? Is this the definition of an asset? Vidula is saying something of value. Yeah, right. Sairam is saying asset is provide the benefit of the company or the entity. You're right, Sairam. Jay is saying something which we can own. Very good. Srinidhi is saying an asset is a resource controlled by an entity as a result of past event and future economic benefit are expected to flow. Right, Srinidhi? You have given the complete definition of an asset, right? So asset is a resource controlled by an entity. You are right, controlled by an entity. So of course it is a resource. It is a resource. That is why it is giving a future economic benefit, right? Of course it is a resource. So resource controlled by an entity as a result of past event resulting in future economic benefit, okay, for which the future economic benefit is expected to flow. So friends, of course, we are talking about resources. All assets are resource, right? That is why, when you are working in an organization, if you are a good employee, your manager will say that you are an asset to the organization because you are a good resource. So you guys have given the definition that something we can own. I mean to say there must be a control. There must be control over that resource, right? So resource controlled by an entity. How this control will come? The control will come as a result of past event. For example, Bharti Airtel has acquired a spectrum license to provide 4G services, 3G services into a particular geography, right? So friends, whether that spectrum license is a resource, answer is yes. Whether it is controlled by the entity, answer is yes. Why? Because Bharti Airtel has paid to the Department of Telecom, Government of India, for acquisition of this telecom license. So as a result of past event, in the past they have paid for it and they got a right to operate in some jurisdiction. They got a right to operate for telecom services. So asset is a resource controlled by an entity, as a result of past event. Okay. So on that resource, there must be a control as a result of past event, resulting in future economic benefit. And of course, future economic benefits should expect to flow. You remember, we have discussed in property, plant and equipment as well, where I have given an example that a company has acquired a machinery. And at the time of acquisition, the government has banned the output from that machinery. So we are not expecting any future economic benefit from that machinery. And in that case, that machinery will not be capitalized as a PPE. That machinery has to be expensed off in the P&L, right? So an asset is a resource controlled by an entity as a result of past event, resulting in future economic benefit. Yeah, right. So where future economic benefit is expected to be flow. Is it clear to everyone? Sir, how this control will arise? Okay. For example, in case of intangible asset, for example, in case of property, plant and equipment, you got a possession of a flat, right? So you are living in that flat. You can restrict others. You can stop others by using the benefit of that flat. But how you can do so in case of intangible asset? For example, I am an author of a book, right? So I will have a copyright. I will have a copyright on that particular publication. So that copyright, by having the copyright, by getting it registered to the authorities, I will have a copyright on that on that particular manuscript, right? So can I stop others by using that that publication? Can I, for example, Srinidhi wants to copy my publication, wants to copy my script. Can I stop her by copying my script? For example, I am living in Delhi and she is living in Jaipur. Can I stop her? Answer is no, I cannot stop her. But yes, I can stop her. If it will come to my knowledge, I can sue her. Okay, I can sue her. Okay, so I can stop her by using that. I can ask for the damages. I can sue her, and I can recover some money from her, right? So by help of copyright, so that is why copyright is kind of a resource which provides me a control. Okay, and I'm controlling that copyright because I'm accessing the use of this particular publication by the others. I can stop others by accessing the future economic benefit from my publication by having the copyright, right? Is it clear? Is it clear, friends? Yeah. So we have understood the definition of an asset. An asset is a resource controlled by the entity as a result of past event, and which is resulting in future economic benefit, or where future economic benefit is expected to flow. So control word is very important, and future economic benefit word is very important. Now let's discuss the definition of intangible asset. We have discussed the definition of an asset. Now we will discuss the definition of intangible asset. Intangible asset. So what is meant by intangible asset? Yeah. Identifiable identifiable non-monetary asset. Identifiable non-monetary asset without having physical substance. What is intangible asset? Intangible asset is identifiable. It is identifiable non-monetary asset without having physical substance. Okay. So this is the definition of intangible asset. So these three words are very important. Identifiable non-monetary asset without having physical substance. First of all, I'll start with without having physical substance. Do I need to explain the meaning of without having physical substance? Yeah. Do I need to explain the meaning of without having physical substance? What is meant by without having physical substance? Means the physical substance will not be there for that, right? For example, spectrum license, for example, rights, okay, software. The physical substance is not there. In case of intangible asset, you cannot see the intangible asset, you cannot hold the intangible asset, you cannot touch the intangible asset, but yes, you can feel the future economic benefit or rights. You can feel the rights, you can feel the future economic benefit which is arising out of such intangible assets. Okay, which is arising out of such intangible assets. So friends, without having physical substance means the asset is not having a physical substance like machinery, like building, like furniture and fixtures, like office equipment, computer, laptop, right? It does not having a physical substance. So without having physical substance is pretty simple. But in without having physical substance, let's discuss. So I am just going by the reverse order, right? I'm going by the reverse order. So what is meant by without having physical substance? So of course, without having physical substance means no physical substance is there for the intangible asset. No physical substance. No physical substance. No physical substance. Like no physical substance like PPE are having physical substance, are having physical existence and physical existence, right? Which we can see, touch, and hold, right? Is it clear to everyone? Okay, 3 participants have responded so far. No physical substance like PP are having physical existence which we can see, touch, and hold. But intangible asset does not having a physical substance. Now, I'll give you some case study or some examples, and just I'll ask you whether a computer or laptop in which operating software are there. Tell me whether this computer or laptop is PPE or this computer or laptop is a software. I mean to say it is an intangible asset. Tell me. And these operating softwares are classified as an intangible asset in computer and laptop, or the entire computer and laptop is classified as tangible asset. Tell me what could be the scenario. Whether, so my question is whether entire computer and laptop will be classified as PPE or intangible asset, or it should be splitted between PPE and intangible asset. PPE and intangible. What is the right answer? Tell me what is the right answer. Utkarsh is saying, Srinidhi is saying only the software, sir. Sairam is saying PP because operating software is integral part of the computer, right, Sairam? So guys, you need to see although there is a computer and laptop and the operating software is integral part of the hardware, operating software is integral part of the computer, right? If the software is integral part of the hardware, then it will not be capitalized separately. For example, MS window, okay, you have installed Windows 10 in your laptop. For example, I'm using this Lenovo laptop while teaching you guys. So once I have installed MS Windows, I have purchased Windows 10 and I have get it installed in my computer. So tomorrow I cannot transfer this Windows 10 to the new device. Okay, so this is kind of computer controlled machine. Right? This Windows software is like a computer controlled software, right? So I cannot transfer this software to another machine, right? If I'm using, so I have to use it, and without window this laptop cannot be used, right? And without hardware this window is not usable. So this window is integral part of the hardware, right? Now coming to the different kind of software, for example ERP. Okay, so ERPs, the access of ERP has been given to multiple geography, multiple machines, so it is not restricted to a single machine. Second, taxman softwares like tax TDS return filing software. So you got a TDS return filing software into a pen drive. So you got a setup file. So wherever you want to install a setup file, you can use that setup file into any machine, into any computer or laptop. Okay. So in this case, when it is not a computer controlled software, when it is not an integral part of the hardware, so such pen drive which is having a setup file of different softwares, so these software can be capitalized as a intangible asset. Okay, for example Tally, you have a Tally license. Okay, so you have a Tally setup files in the pen drive. So if you want to use Tally in any computer, you can use the Tally in any computer, right? For example, you can log off into another computer and you want to install a set of files into different computer, you can do that. So this Tally software is like an intangible asset. But if the software is an integral part of the hardware, integral part of the computer or laptop, it has to be classified as PPE, right? It has to be classified as PPE. So you have to see which part is more significant. And here computer and laptop is more significant, and hence it will be a property, plant and equipment. So in this case, computer or laptop in which operating softwares are there, in this case this will be a, what will be the answer? What will be the answer? So answer is computer or laptop is capitalized as PPE, right? Robot, nice. Robot, is it a PPE or is it an intangible asset? Whether robot, is it a PPE or intangible asset? Tell me. Mahendra, computer is a PPE and it should not be splitted because the operating system is integral part of the hardware, right? So J, operating system is again integral part of the computer and laptop, and it has to be capitalized as an entire computer and laptop as a PPE. Have you seen when you buy the laptop, have you seen whether the companies are splitting the operating system and capitalizing it separately, and the remaining part of the computer and laptop they are capitalizing it separately? I have never seen that. Yeah, Sairam is right, PPE, because operating software is integral part of the computer. So this entire machine has to be shown as a PPE. Guys, robot, have you seen the robot? Have you seen the Alexa? So robot is something which works on the instruction, right? I mean to say there is some program which is inbuilt into the robot, okay? And robot is working on those programs. When you say Alexa, Alexa, what is the weather outside? So Alexa will tell you it is outside, it is very humid, it is 10 degrees Celsius, right? Or let's say, so there is a program which is inbuilt into Alexa. When you ask Alexa, it went to the Google on a real-time basis, and then it Google out, and then it provide the information. When you ask Alexa, Alexa, how are you feeling today? So Alexa will say, I am feeling good today. So if anyone in your family will ask Alexa, how are you feeling today? So Alexa will provide the same answer. Why? Because you are looking into the Alexa as a tangible item, like where you will say that yes, physical substance is there, but going by the substance over form, what is there in Alexa? There is a program, there is a knowledge which is embodied in Alexa, right? So my dear friends, if we see the substance, we feel like it is a property, plant and equipment. But if we see the substance, if we see the form, it looks like a property, plant and equipment. But when we see the substance, it is not a property, plant and equipment. It is an intangible asset, because it works on the instruction and program which is inbuilt into the Alexa or inbuilt into the robot, right? Many companies, Mr. Mahendra, it is not PP, it is intangible assets, right? Many companies, for example, if I talk about Mercedes, so the car plant of Mercedes is entirely automated, right? So when I say automated, this entire manufacturing process works on some instructions, work on some robotic mechanism, right? So what is this entire setup? They have capitalized this entire setup as an intangible asset, not as a property, plant and equipment. So there are robots which are working in that Mercedes plant, and these robots are nothing. These are the programs, these are the softwares, these are the knowledge which is embodied into a physical substance, right? But what is the substance over that? What is the significant component over that? The significant component is the knowledge embodied in the robot, and hence it is an intangible asset. It is not a property, plant and equipment, right? I hope it is clear to everyone. For example, you will buy some software. So of course, when you buy some software, the software will become under CD, compact disc, or let's say floppy drive, or let's say pen drive. So we are just taking a medium for storing these intangible assets, right? But of course, going by the form, you will feel like it is I can have pen drive, I can touch pen drive, I can use pen drive. So it's just, you feel that it is like a PPE. But what is the substance? The substance is the software. The substance is intangible asset. The significant component is intangible asset. And the medium in which you are storing these things is minuscule, is insignificant, right? For example, you're buying a license or buying a rights. So government will of course provide you a copy of agreement. So copy of agreement is a piece of paper, right? You can physically touch, you can hold, you can see. But what is the substance behind that? The substance behind that is the rights which you are getting by signing that piece of paper as a contract, right? So we need some medium to store or to conclude these intangible assets, but the substance is intangible asset. It is just a medium on which we are storing these intangible assets. I hope it is clear to everyone. Mahendra, I hope it is clear to you. Yeah. So license given by way of a contract. License given by way of a contract. Is it a PP or intangible asset? What is the answer for robot? What is the answer for robot? Robot is a license given by way of contract. Is it a PP or intangible asset? License is an intangible asset. Yes. License is capitalized as an intangible asset, right? So we have discussed the first part. Do you have any problem in without having physical substance? Of course. Of course, for meeting a definition of an intangible asset, the physical substance should not be there. Building cannot be intangible asset. Machinery cannot be intangible asset. Furniture and fixture cannot be intangible asset. Your refrigerator cannot be intangible asset. Computer, laptop cannot be intangible asset, right? Because they have a physical substance. Second, non-monetary asset. What is meant by non-monetary asset? Friends, what is meant by non-monetary asset? Can you answer this quickly? What is meant by non-monetary asset? The more you interact, the more you learn. And our objective is to clear CA final examination, right? Our objective is to become a chartered accountant. So what is meant by non-monetary asset? And these things are very important. That is why I'm spending a lot of time on in this definition. Non-monetary asset. What is meant by non-monetary asset? You can apply this concept while auditing a client, okay? Or while finalizing the balance sheet in your practical life or real life scenario. Yes. Is it clear? Non-monetary asset. What is meant by non-monetary asset? For understanding the non-monetary asset, first of all, let's understand monetary asset. What is meant by monetary asset? Asset which is settled in cash. Asset which is settled in cash. For example, trade receivable. Trade receivable. So when you sold a inventory, right? So when there is an inventory is a non-monetary asset. But when you sold an inventory, it becomes a trade receivable, right? So the price is determined and you are aware that I have to receive 20,000 rupees from a customer, right? So when you sell the inventory, for example, the inventory was of a value of 50,000 rupees, but the customer has negotiated, right? And you are ready, you are ready to pay, you are ready to sell this inventory at a price of 30,000 rupees, right? At a price of 30,000 rupees. So when you sell this inventory to the customer, what accounting entry you will pass? You will pass a trade receivable, or let's say customer account debit, to inventory account. The moment you sold the inventory, the price or the money which is receivable from this customer becomes definite. I mean to say, it is identifiable. The price is identifiable. The price is determinable, right? So monetary asset means asset which is settled in cash into a fixed unit of money, I mean to say, we are aware what amount we are going to receive from the customer. Doesn't matter, the customer will become bankrupt or he will not pay. So it is upon his intention. But today, when I'm selling the inventory, when I sold the inventory, I know what amount I need to receive from the customer. Okay. So trade receivable is a monetary asset. What is a non-monetary asset? Assets which are not monetary are non-monetary asset. Assets which are not monetary are non-monetary assets, right? The assets which are not monetary, like for example, what could be the example of non-monetary asset? The example of non-monetary asset is PPE, intangible asset, investment property, inventory, biological asset. These are the example of non-monetary asset. These are the example of non-monetary asset. What are the example of monetary asset? Trade receivables, loan receivable, trade receivable, loan receivable, right? Then your cash, fixed deposit. Okay. So I hope you have understood the meaning of non-monetary asset. Vidula is saying, sir, asset of which monetary value cannot be determined. You are right, Vidula. For example, you are using a building. Till the time you will not sell the building, you cannot determine that at what price, that the price which has to be received from the sale of the building. So it is not determinable, right? So Mahendra, you cannot say that non-monetary asset means having no value. This is having a value, and at that value you have recorded that asset in the balance sheet. But the point is, it is not going to settle in cash. Probably, if you have constructed a factory for 500 crores, you are using this factory in the production or supply of goods and services for 20 years, right? So your intent is not to sell this property. But once you sell this property, once you sell this factory, and the money is receivable from the buyer, it will become your monetary asset. But till the time you're not selling these assets, it is your non-monetary asset, right? Inventory is a non-monetary asset. I hope it is clear to everyone, guys. I hope it is clear to everyone. Identifiable. What is meant by identifiable? What is meant by identifiable? Identifiable means separable. Identifiable means separable. Okay, either separable or when an asset will be considered as identifiable. So an asset is considered as identifiable when it is separable, or arises from contractual or other legal rights. Arises from contractual or other legal rights. So friends, sorry. So friends, an asset is considered as identifiable when it is separable, or it arises from contractual or other legal rights. It arises from contractual or other legal rights, right? So when it is said to be separable, when it is considered to be separable, it is considered to be separable when it is capable of being sold, rented, licensed, exchanged separately from the entire business or entity. Right? Sir, we haven't understood anything as far as identifiable is concerned. Don't worry. Jay, what do you want to repeat from my side? You want to repeat the meaning of non-monetary assets? Monetary assets are those assets which can be converted into the money, right? Which can be converted into the fixed amount of money, determinable amount of money. fixed amount of money, determinable amount of money, right? Coming to non-monetary asset, for example, PP. So your intent for PP is not to sell that PP, and you are not aware what amount I'll fetch from selling this PP, right? And this is not determinable. The fixed unit of money is not determinable until and unless you will actually sold that PP, right? So when you actually sell this PP, of course you will be aware that what amount I'll receive from this PP, right? For example, cash at bank, you are aware that 50,000 rupees is there in my bank account. You have a 1 lakh rupees of fixed deposit. You are aware that 1 lakh rupees FD is there in my bank account, right? So for example, once you sell the inventory, so you are aware that I have to receive 20,000 rupees from Mr. Ram, right? So whenever you are talking into the fixed unit of money. But when I'll ask you, okay, okay, Jay, you are going to audit a client, and that client is having a property, plant and equipment of, let's say, 50 lakh rupees. Of course, there is a value at which he has recorded that PPE, and probably he has acquired this PPE 15 years ago, right? And he is applying a cost model, right? So the PP is coming at 50 lakh rupees. Will you say that it is a monetary asset? When you will say it is a monetary asset, I'll say that, Jay, please show me the document where you can say that, sir, this client is going to receive 50 lakh rupees from this PP. You cannot say that, right? And hence it is a non-monetary asset. That is why the inventory is a non-monetary asset. But once inventory has been sold out, it become a monetary asset. Why? Because the fixed unit of money which is receivable is determinable. Understood? I hope it is clear. Yeah. So coming to the third concept of identifiable. So what is the definition of intangible asset? An intangible asset is an intangible asset means identifiable non-monetary asset without having physical substance. So this number 3 we have understood, number 2 we have understood. Now we are going to discuss number 1. Okay, so although we have discussed in the reverse order. Identifiable. So we understood the meaning of non-monetary asset, intangible asset and non-monetary asset. Intangible asset does not have any physical substance, but intangible assets should also be identifiable. What is meant by identifiable? Since intangible asset is not having a physical substance, that is why this step is very important. I cannot use this word identifiable in my property, plant and equipment. Do you remember? I use the word identifiable in my Ind AS 16 lecture. I haven't used this word. Why? Because, for example, when you go to buy a flat, okay, buy a property, the seller will say that this is the house which I am going to sell you, right? So the house itself is identifiable. The property itself is identifiable. You can identify because this is having a physical existence, right? When I went to buy a refrigerator, I'll say that, okay, I want to buy a 400-liter Samsung refrigerator, right? So this is having a physical substance and hence it is identifiable, right? So we haven't talked about identifiability criteria in PPE, but yes, this is the most important criteria in case of intangible asset. And standard says that an asset is considered as identifiable when it becomes separable or it is arises from contractual or legal rights. So friends, when it is considered to be separable. So I'll give you an example. For example, there is a company XYZ Private Limited, and XYZ Private Limited has a legacy of, let's say, 50 years. XYZ Private Limited is selling a product for last 50 years. So they have created a market share. For example, due to their quality, due to their behavior, due to their customer relation, more than 50% of the market share belongs to XYZ Private Limited. It means, for example, in the market, there is 100 crore rupees of sales. So 50 crore rupees of sales is entirely done by XYZ Private Limited and 50 crore by other vendors, by other suppliers, other shopkeepers. So question arises whether XYZ Private Limited can capitalize this market share. Have you understood? So with the legacy of 50 years, with their behavior, their customer relation, their quality of the product, they have captured 50% market share. When I say they have captured 50% market share, means the entire among the entire customer portfolio, 50% of the customer portfolio comes to this shopkeeper, comes to XYZ Private Limited. So of course the future economic benefit is there because there are a lot of customers which are coming to this company. So can I say that this market share this XYZ Private Limited, if wants to capitalize this market share in their books of accounts as an intangible asset, can they capitalize this? Yes or no? Megha is saying no. Okay. What about others? What about others? Utkarsh is also saying no. Why? So friends, first of all, an asset is considered as identifiable when it is separable or it arises from contractual or other legal rights. Tell me whether there is any contractual or other legal rights associated with its market share. Have I contracted with the customer that yes, you all will purchase from my shop only? Is there any contract between the customers and this particular entity? There is no contract, and hence there is no contractual right, Okay. If there is no contractual right, in that case, please tell me if there is no contractual right, can I say that? If there is no contractual right, can I say it is separable? Okay. So this condition I am not satisfying. So am I satisfying this condition? So let's see what is the condition. An asset is considered as separable when it is capable of being sold, rented, licensed, exchanged separately from the entire business or entity. So if I want to sell this market share, can I sell this market share separately? So without selling my entire business, if I want to sell this market share, can I sell this market share? For example, a new company, PQR Limited, will come into this market. So can I say PQR Limited, that PQR Limited, I am having a 50% customer portfolio. Okay. So I am just selling 30% customer portfolio to you. Can I say that? For example, if some customer will come and I will deny those customers that I am not going to sell you. So probably that customer will not go to PQR, the customer will go to somewhere else as well, right? So it means this market share is also not separable. Without selling the entire business, without selling the entire entity as a XYZ Private Limited, I cannot sell this market share separately. I cannot share this market share separately. Okay. This market share cannot be sold, rented, licensed, or exchanged separately from the entire business. This market share goes when the entire business will sold out, entire entity will sold out. So this market share will go with that entity, right? But if I want to sell only the market share, I cannot sell the market share, right? Is it clear? Is it clear? Yes, Jay, it will part of the goodwill, but internally generated goodwill is not allowed. But if I will sell the entity, I will sell the entire business, then the buyer can recognize the goodwill for that if the buyer is paying extra. But of course, buyer will pay extra because this business has a legacy. This business has a good market share, right? And hence market share will not be capitalized. So market share will not be capitalized. Market share will not be an intangible asset, will not be capitalized. Let's say recognized as intangible asset because it is neither arises from contractual or legal rights, nor it is separable. Clear? So market share will not be recognized as intangible asset because it is neither arises from contractual or legal rights, nor it is separable, right? Second example, RCOM, Reliance Communication. Communication have purchased a telecom license from Government of India. Is it an intangible asset? Can I say that this Reliance Communication has purchased a telecom license from Government of India? Can I say that it is identifiable? It is meeting the condition of identifiable? Answer is yes. Why? Because Government of Reliance has paid for that, and Government of India has given a license for 15 or 20 years. So it is arising from contractual or legal right, and it is separable also. If Reliance wants to sell this spectrum license to others, it can sell to others, right? So normally, in case of acquired intangible asset, this is meeting the definition of arises from contractual or other legal rights or separable, right? So it is always meeting the criteria of identifiability when you are actually paying for that, right? It is normally meeting the criteria for identifiability. Third example, in this case, yes, it is recognized as an intangible asset, right? Third example, there is a radio 93.5 FM, right? So there is a radio company, for example, let's say Chili's Entertainment Private Limited, and the government has given the broadcasting license to this entity, and this license is non-transferable. So government has given a license, and this entity can use this broadcasting rights for next 5 years. Okay, for 5 years. And government has said that this license is non-transferable. Okay, so if you want to sell this entity, when this entire entity will be sold, the license will go with that entity, right? So it is not separable. Tell me, in this case, whether this broadcasting license in this company is meeting a identifiability criteria. Can we recognize this as an intangible asset? Tell me, can I recognize this as an intangible asset? Can I do that? Tell me, can I do that? Yeah. Yes, this is also meeting the definition or meeting the condition of identifiability. Why? Although it is non-transferable, although it is non-separable, but it is arising from contractual or other legal right. This company has paid for this broadcasting license, and the government of India has given a right, a contractual right or legal right to broadcast the songs, or let's say broadcast the content, right? So it is arising from contractual or other legal rights, and hence it is meeting the identifiability criteria. Please mind word, it is or, it is not and, it is or, right? It is or. I hope it is clear to everyone, guys. Any problem, any challenge so far? I hope it is clear to everyone. Jay is saying not separable but arises from contract. You are right, Jay. Mahendra is saying intangible asset. Okay. So friends, whomsoever is saying it is not an intangible asset, it is intangible asset. It is not separable, but it is arising from contractual or other legal right. So you have to see either of the condition, right? For example, TCS or Oracle. Oracle is configuring a customized ERP for a particular entity, right? So the ERP has been customized in requirement of a particular company. So this ERP is non-transferable, okay, because there is no use for other entity. When this entity will sold out, then only the entity who will buy this entity, so this ERP can be used, right? So it is non-separable because it cannot be sold separately. But this entity has purchased this ERP, has get this ERP developed from Oracle, right? So whether this ERP can be capitalized, although it is non-separable, but yes, it can be capitalized because it is arising from contractual or other legal rights because the entity has paid for it, right? So going by the second condition, arising from contractual or other legal right, this ERP will be capitalized. This ERP will be capitalized, right? So friends, we have discussed the definition of an asset, where we have discussed the meaning of control. What is the meaning of control? Control means enjoying the fruit of this asset or stopping the excess of others by using your product or your asset, right? So others will not have a benefit of your asset, right? What is meant by future economic benefit? Future economic benefit means capacity to earn revenue or a capacity to reduce cost, right? Like in case of intellectual property rights, like in case of a company which has automated its processes, right? Earlier there was a lot of manual intervention was there. Now the company has automated the processes. So by automating the processes, what happens? By automating the processes, there is a reduction in the cost, there is a saving in the cost, right? So although there could not be increase in revenue, but there is a saving in the cost, and hence it is also considered as a future economic benefit. I hope it is clear to everyone. Yeah, I hope the definition is clear to everyone. So friends, it's 8:15 now. So Sairam has asked one question. Sir, inventory can also be considered as monetary because at time on manufacturing we fix price per unit. Sairam, you are right. For recognition of any asset, there must be a value. We all understood. For PP, of course, there must be a value, right? So I'm not talking about the asset which is having a value or which is not having a value. Even non-monetary asset is having a value. So the question is not of a value. The question is of settlement in cash, right? What happens if this inventory will not be sold out? Then can you say that today? Yes, sir, this inventory is cash settled. Can you tell me the time of disposal of inventory? Can you tell me at what amount this inventory can be sold? Or can you tell me what money you will receive from selling this inventory? So Sairam, the concept is monetary asset are those assets where the right to receive cash will be established. Since it is an inventory, the right to receive cash will not be established, right? Until and unless you will sold the asset. If the inventory is in the godown, can you say that, sir, I have a right to receive the cash? You don't have right to receive the cash until and unless you will sell this inventory, right? So that is why it is not a monetary asset, it is non-monetary asset. I hope it is clear to you now. So guys, it's 8:18 now. Let's have a 10 minutes break and we will start at 8:30, right? Yeah. So students, we talk about the definition of asset. An asset is a resource controlled by an entity as a result of the past events and from which future economic benefit are expected to flow to the entity, right? What is an intangible asset? An intangible asset is identifiable, non-monetary asset without having physical substance. Monetary assets are money held and asset to be received, right? In fixed or determined amount of money, in fixed or determined amount of money, right? Fixed or determined amount of money. What is meant by identifiable? An asset is considered as identifiable if it is separable or arises from contractual or other legal right. Generally, in case of acquisition, in case of when you are paying for acquiring an asset, so normally this criteria will always met, right? What is meant by separable? When it is capable of being separated or divided from the entity and sold, transferred, licensed, rented, or exchanged, right? Let's do this case study on identifiability of intangible assets. Pluto Limited intends to open a new retail store in a new location in the next few weeks, right? Pluto Limited has spent a substantial sum on a series of television advertisements to promote this new store. So Pluto wants to open a new store in a new location in next some few weeks, for example, in 2 months. And Pluto has already spent a huge money on advertisement to promote this store. The company has paid an amount of rupees 8 lakh for advertisements before 31st March 2001, right? And the company has spent a substantial amount for the advertisement. 7 lakh rupees of this sum relates to advertisements shown before 31st March 2001 and 1 lakh to advertisements shown in April 2001, right? So company has paid 7 lakh rupees for advertisements prior to 31st March 2001 and 1 lakh has to be spent after 2001, right? Means the advertisement related to 1 lakh rupees has to be shown in the next financial year, which is 2001-2, right? Since 31st March 2001, the company has paid for further advertisement cost for rupees 4 lakh. And company has also paid subsequently, the company has also paid further cost of advertisement of 4 lakh rupees. Pluto Limited is of the view that such cost can be carried forward as intangible assets. Since market research indicates that this new store is likely to be highly successful, please explain and justify the treatment of the above cost in the financial statement for the year ended 31st March 2001. So for the year ended 31st March 2001, Pluto Limited has spent 7 lakh rupees on advertisement, right? And the company wants to defer this cost as an intangible asset. The company wants to capitalize this cost and wants to amortize this cost over the future economic benefit, over the useful life where the company will expect the future economic benefit. And the market research is indicating that yes, due to this advertisement, this store will be highly successful. The company will have future economic benefit, right? So of course, this advertisement is an intangible resource. I'm using the word resource. I'm not using the word asset. So you need to see the 3 criteria. Is it a non-monetary item? Yes, it is a non-monetary item, right? Is it without having physical substance? Yes, advertisement is not having a physical substance, right? So their future economic benefits are inherent. Okay. Sir, is it identifiable? Is it identifiable? Can you sell this intangible asset? Can you sell this advertisement to somebody else? Can you sell this advertisement? Answer is no. When I'm talking about to sell this advertisement, I'm talking about the benefit which is coming from the sale of this, which is coming from this advertisement. So this benefit only belongs to you. This benefit only belongs to company, and the company cannot sell. The company cannot sell, rented out, or exchange this advertisement benefits apart from selling the entity as a whole. Second, it is not arising from legal or contractual right. No any advertiser will contract or will say that, okay, since I am taking an advertisement cost from you, I am doing an advertisement, say I am taking a guarantee that yes, at least 50,000 customer will come to you. So no one will take a guarantee. Probably after doing this advertisement, probably nobody will come, right? Nobody will come. I've seen so many ads on Facebook, like for yoga, for recreational activity, and you will see that there is no any like on those posts or those advertisements, right? And they have spent money, they have paid Facebook for those advertisements, but no one but no one is what I say, registering for those kind of events or those kind of activities. So this advertisement is not meeting the identifiability criteria, right? Is it clear? It is not meeting the identifiability criteria because it is not acceptable. Under Ind AS 38, intangible asset can only be recognized if they are identifiable and have a cost which can be reliably measured. These criteria are very difficult to satisfy for internally developed intangible assets. For these reasons, Ind AS 38 specifically prohibits recognizing advertising expenditure as an intangible asset. Why? The issue of how successful the store is likely to be does not affect this prohibition. Therefore, such costs should not be recognized as an intangible asset and should be recognized as an expense. However, the cost would be recognized on an accrual basis. Therefore, of the advertisement paid before 31st March 2001, only 7 lakh will be recognized as an expense and 1 lakh rupees of prepayment will be recognized in the next year, right? The 4 lakh cost of advertisement paid for since 31st March 2001 would be charged as an expense in the next year, right? So this will not be recognized as an intangible asset. Control, I have discussed you with the example of a copyright as well. An entity control an asset if the entity has power. Power to what? Power to obtain the future economic benefit. From the book, I'll get the royalty, right? And if anyone wants to copy my content, I can stop him. I can stop her. Power to restrict the access to future economic benefit of others, right? I can stop others from accessing the future economic benefit from my content. I will have a legal right, power due to the legal rights. Okay? So in absence of the legal right to protect, generally the entity has insufficient control over the expected future economic benefit. So in case of intangible asset, generally power comes from the legal rights, right? Example, a team of skilled staff, customer relations and loyalty cannot be capitalized as an intangible asset. Why? Because the company is lacking a control. For example, if a company has spent huge money on the training of some staff, right? On the training of some staff. So can the company stop this staff from resigning? Can the company stop the employee from resigning from this organization? Answer is no. What makes the company can do? The company can, for example, the company can just arrange a course for him. So the company can recover the course fee, right? That is the maximum a company can do. The company cannot stop the staff or stop the employee from resigning, and company cannot say that employee that whatever training I have given to you, don't use this training in your next job. Okay. So whatever skill set this employee has gained in this organization, he will deploy or he will use that skill set in the next organization, right? So other organization will also get the benefit out of the training which is given to this employee in the current organization, right? So the thing is, in case of a staff to whom the company has given a training, in case of a customer relationship, so you have a good customer relationship, but you cannot stop that customer by accessing the other product or the other shopkeeper or other suppliers, right? Loyalty. So these kind of items are, these kind of concepts are there where there is lack of control. There is no control, and hence we cannot capitalize these items as an intangible asset. So whenever the company is giving a training and spending a huge money on the training, the company cannot defer the cost, and the company cannot recognize those costs as an intangible asset, right? I hope it is clear to all of you. So let's have a brain teaser on that. The company XYZ Limited has provided training to staff on various new topics like GST, IFRS, Ind AS, etc. to ensure the compliance as per the required law, right? Can the company recognize such cost of staff training as intangible asset? Srinidhi, what is your view? Jay, Priya, Vidula, Sai, Mahendra, what is your view? Utkarsh, Megha, what is your view? Can the cost of staff training recognize as an intangible asset? Yeah. So guys, by providing the staff training, by providing the training to the staff, of course, this staff will have a future economic benefit. So of course, the company will have a future economic benefit. The staff will work more accurately, more properly, right, more efficiently by having such trainings. The outcome productivity will grow for that staff, right? So what is the analysis for this? Although the future economic benefit the company will receive, the company does not have a control over that staff or that employee, that this employee will only work in this company and will not resign in this from this company, and the employee will not use this skill set or this training to the other organization, right? So it is clear that the company will obtain the economic benefit from the work performed by the staff as it increases their efficiency, but it does not have control over them because staff could choose to resign the company at any point of time. Hence, the company lacks the ability to restrict the access of others to those benefits. Therefore, the staff training cost does not meet the definition of an intangible asset, right? Clear? You're right, Vidula, it has to be treated as an expense. Future economic benefit, I told you that future economic benefit could be a capability of earning revenue, capability of reducing cost, or other benefit resulting from the use of the asset. This is the meaning of future economic benefit. For example, using of intellectual property will help in the reduction of costs in the production processes, right? Coming to the recognition criteria. So guys, when an intangible resource, so we have understood the definition of an asset and intangible asset, right? So for being an item as an intangible asset, it should be identifiable, it should be non-monetary asset, it should be without having a physical substance, and there must be a control over that asset, right? So coming to the recognition criteria, when an intangible resource will recognize as an intangible asset. So guys, two conditions will also be always be there. One, future economic benefit is probable and the cost can be measured reliably. Future economic benefit is probable and cost can be measured reliably. Apart from this, one more condition is there. The definition of intangible assets should be met. Otherwise, there is no difference in the recognition criteria between PPE and between the intangible asset. Okay. So this future economic benefit and cost can be measured reliably. These two aspects, these two criteria are also there in property, plant and equipment. So should I recognize this building as a PPE or as an intangible asset? There will be a conflict. So that is why the third criteria which is there is it should meet the definition of intangible asset. And what is there in meeting the definition of intangible asset? The third part, of course, building is also identifiable. Building is a non-monetary asset. PP is identifiable. PP is non-monetary asset. But what is the third part? Without having physical substance. So when the standard captured the meeting of definition of intangible asset, meeting the definition of intangible asset, what does it mean? It means that the item which has to be recognized as an intangible asset, it should be without physical substance. And it should meet two criteria, which is one, economic benefit should be probable and cost should be measured reliably, right? And intangible asset should be initially measured at cost. It should be initially measured at cost, right? So coming to the mode of acquisition, and we will discuss the cost one by one. So let's discuss mode of acquisition. So what could be the mode of acquisition of intangible asset? One, it could be a separate acquisition. You go to Oracle and you asked Oracle that please develop an ERP for me. You have to pay 10 crores to the Oracle. So it is a case of separate acquisition. You went to Tally and you asked that I want 5 licenses of Tally. So Tally has told you that, okay, if you want 5 licenses, I'll give you 5 licenses at a cost of, let's say, 50,000 rupees. So this is a case of separate acquisition, right? Second, very important part of a business combination. An entity has acquired another entity. Facebook has acquired WhatsApp. Facebook has acquired WhatsApp. Okay. And Facebook has paid $20 billion for acquiring WhatsApp. And if I talk about the tangible asset of the WhatsApp or tangible net worth of WhatsApp, probably it was $0.5 billion. So why Facebook has paid so much of huge money for acquiring WhatsApp? Because the Facebook was looking for a future economic benefit in terms of a subscriber base, in terms of customer base, right? In terms of customer base, Facebook has recognized goodwill due to this transaction. So intangible asset could also come by way of a business combination, by way of mergers and acquisitions, right? Clear? Government grant, like I told you, if you want to do a business in a remote area, so government is also providing a grant in the terms of giving you rights at a concessional rate or rights at a free of cost, right? So this is the third part which we are also going to discuss. And government is also providing you the fixed asset, the intangible asset in terms of government grant. The fourth one is internally generated goodwill. Of course, as an agenda, we have said that as an agenda this is there, but internally generated goodwill is not going to be capitalized. Internally generated goodwill is prohibited for capitalization. It is not going to be capitalized, right? Internally generated intangible asset, we will discuss that. Okay, so this internally generated goodwill is not to be capitalized. Internally generated intangible asset, we will discuss that. For example, in case of pharma companies, the classic example is internally generated intangible asset. In the case of nuclear companies, of course, some internally generated intangible asset could be there. In case of IT companies, of course, some internally generated intangible asset is there. So we'll talk about research and development phase while discussing internally generated intangible asset. The fifth part is exchange of assets. Okay, when we are acquiring intangible asset in exchange for other monetary asset or non-monetary asset, or in combination of non-monetary and monetary assets, right? So we'll discuss these 6 parts as a mode of acquisition, and while discussing these 6 parts, we will discuss at what value intangible asset has to be recognized. Okay, intangible asset shall be measured initially at cost. So cost comprises what? We will discuss it. So first, let's discuss the separate acquisition, right? So cost includes, if you remember Ind AS 16, there were 3 legs in Ind AS 16. There was 1 leg more, right? So in Ind AS 16, we discussed that cost includes purchase price, including import duties and non-refundable purchase taxes after deducting trade discount and rebates, plus directly attributable cost of preparing the asset for its intended use. What is meant by directly attributable cost? Directly attributable cost means this cost would not have been incurred if the intangible asset would not have been acquired, right? For example, for getting the intangible asset into the condition of available for use, you have to get it registered with the drug authorities, or let's say government authorities. So for getting it registered with the government authorities, you have to pay some money for registration, right? So in this case, it will be considered as a directly attributable cost, and it will be capitalized as a part of the cost of the intangible asset. The third aspect which we have discussed is the decommissioning cost, site restoration cost in case of PPE, in case of property, plant and equipment. But in intangible asset, this will not be there. Why? Because guys, you have to dismantle only those things which have a physical existence. If the intangible asset will not have a physical existence, that how will you dismantle that, right? If an item which is not having a physical existence, the question of dismantle will not arise. So that is why the third leg is not there in the cost of intangible asset. In the assessment of cost of the intangible asset, only 2 legs are there, which is purchase price, including import duties and non-refundable taxes after deducting trade discount and rebates. The second one is directly attributable cost for preparing the asset for ready for its intended use, right? I hope it is clear to everyone so far. Recognition criteria was quite simple. Then we were talking about the cost criteria. What is the cost which is included and excluded? Cost of employee benefit. The employees who have engaged in the development of intangible asset, that employee cost should be added as a part of the cost of the asset. Professional fees. Professional fees is part of the cost of the asset. Cost of testing is again, if scientists or doctors are just testing this intangible assets, the cost of testing, or they have sent this intangible asset to some laboratories, to some experiment house, right, for the testing purposes. So these cost of testing is also included in the intangible asset. Cost not included: advertisement cost, promotional expenditure, right? Cost of conducting a business in new location or new class of customer, audit fee, administrative fee, general overhead cost. These costs are not going to be included in the cost of intangible asset. Although we have also we have also discussed about these costs in our property, plant and equipment standard, right? So this cost not included is somehow similar cost which was there in the property, plant and equipment standard, right? Any doubts so far, guys? Sairam, decommissioning expense means, for example, if like tower companies, if I talk about Bharti Infratel Limited, they are installing tower on the land of the landlord, right? So for example, I have given my space to Bharti Infratel Limited that please install your tower here for next 20 years, right? And I have an agreement of 20 years. And I have said them that after 20 years, whenever you will go, you have to dismantle this tower, of course, and you have to give me my space in the same condition in which I have given you. So you have to remove, you have to excavate all these concrete work, civil work, you have to put soil here, and you have to give me the complete free ground, right? So that whatever I want to use, I can use, right? So of course, by installing this tower, I will have a decommissioning cost or site restoration cost in future, right? Where I have to incur a cost. So Ind AS 16 says that such decommissioning, such future cost has to discounted to the present value and has to be added to the cost of the asset, right? And the credit leg will go to the provision for decommissioning liability. Okay. So friends, we have talked about the cost. Now let's talk about the deferred payment credit. So what is meant by deferred payment credit? Same concept which we have discussed in Ind AS 16. So deferred payment credit means, for example, I went to Oracle and I said Oracle that Mr. Oracle, I want to develop an ERP. I want to have an ERP for my organization. Oracle says that okay. Okay, Mr. XYZ, I will develop that. So I have asked what is the cost of this ERP which I want to use, which I want to get it developed. So Oracle said me that it is costing of the cost is of 10 crores rupees. I said okay, but I told them that I don't have money as of now, so I'll pay you 2 years later, right? Then Oracle told me in that case it is not 10 crore, it should be 15 crores, right? So it means when I'm deferring the payment terms from instant or within 1 year to 2 years, so my purchase cost becomes higher, right? So Oracle is giving me a quotation of 15 crore instead of 10 crore, right? So if payment for an intangible asset is deferred beyond normal credit terms, its cost is the cash price equivalent at the recognition date. Okay, its cost is the cash price equivalent at the recognition date. Okay, so I have to recognize this ERP, this software at 10 crore rupees, and the difference between 15 crore, which is consideration paid, versus cash price equivalent of 10 crore. 15 minus 10, cash price equivalent is 10 crore and total payment is 15 crore. Cash price equivalent is 10 crore. So the difference of 5 crore will go to finance cost. Okay. If such asset is a qualifying asset and as per Ind AS 23, such finance cost can be capitalized, then it will be 15 crores only. Otherwise it should be 10 crores. The asset has to be recognized at 10 crore on the cash price equivalent, and the difference between consideration paid, I mean to say total payment, versus cash price equivalent will go to finance cost, right? Is it clear? Let's do a case study on separate acquisition. OBC Inc. acquired a software. This is the name of the company. This company has acquired a software for its internal use costing rupees 10 lakh. What is the purchase price? The purchase price is 10 lakh rupees. The amount payable for the software was 6 lakh rupees immediately, and the company is paying immediately 6 lakh rupees, and company is paying 4 lakh rupees in 1 year's time, after 1 year, right? It means it is a deferred credit term, right? The other expenditure incurred were there is a purchase tax of rupees 1 lakh rupees and nothing is given for this purchase tax. So we will assume that it is non-recoverable, right? It is non-refundable. There is an entry tax of 10% and it is given here that recoverable letter from tax department. So this is a refundable tax, right? It will not form part of your cost. But if it is non-refundable, it will form part of your cost. Legal fees of rupees 87,000. The company has also paid legal fees. Consultancy fees for implementation. The consultancy fees for implementation is 1,20,000. Okay. So the company has paid consultancy fee for implementing this software. And again, it is a directly attributable cost. It should be there. And the cost of capital is 10%. Why this is given? Can you tell me why this cost of capital of 10% is given? This is given just for the purpose of discounting, just to arrive at a present value of this 4 lakh rupees. Okay. Calculate the cost of the software on initial recognition using the principle of Ind AS 38 intangible asset. So friends, first of all, what we are required to do? The cost is 10 lakh rupees, right? But the company is paying 6 lakh immediately and 4 lakh is in 1 year's time. Then what I should do? 6 lakh rupees I have to capitalize upfront, right? 4 lakh rupees I have to arrive at a discounted value, at a present value. 4 lakh rupees I have to calculate the present value, right? So how to calculate the present value of 4 lakh rupees? 4 lakh divided by, it is 10%, so 4 lakh divided by 1.1. Okay, it will give you the present value on the 0 date, because the payment has to be made in 1 year's time. This purchase tax, first of all, the cash paid is going to be part of the cost of the asset. The second one is deferred consideration. So 4 lakh divided by 1.1 will give you 3,63,636, right? There is a purchase tax of rupees 1 lakh, right? So of course it is non-refundable and hence it is going to be capitalized, right? Because the question is silent about this. Entry tax, it is refundable, it is recoverable. So there is no point of adding it to the cost of the asset, right? Legal fees. So coming to the legal fees is 87,000, right? So legal fees is 87,000. So we have to capitalize this legal fees because this legal fees of 87,000 is there. Again, implementation cost of 1,20,000 is also to be capitalized. So these are the directly attributable costs. These are the directly attributable costs, right? This has to be capitalized. And the total comes out at 12,70636. So this is going to be the accounting entry for intangible asset. What will be the accounting entry? The accounting entry will be intangible asset account debit, intangible asset debit to bank or to supplier or vendor, right? 1270,636. 1270,636. I hope it is clear to everyone, friends. Let me know if you have any doubt here. Yeah. Let me know if you have any doubt here. In ICAI study material, similar question is there, right? So you can do that also. Right. So in case of a separate acquisition, we have discussed that how to arrive at a cost, right? We have also done this particular thing. What is the meaning of the cost, right? Yes. So friends, when the intangible asset is separately acquired or purchased, it has to be recognized at cost. And when I say cost, purchase price inclusive of non-refundable taxes plus directly attributable cost incurred for its intended use. And of course, if there is any discount or rebate, that has to be deducted. Now, the second concept is when the intangible asset has to be acquired in business combination, then what is the meaning of cost? So friends, for example, Sun Pharma acquired a stake in Ranbaxy, right? So what is the benefit out of that? The benefit is, for example, Ranbaxy into the generic medicine. Sun Pharma will have a right or access to the formula which is used by the Ranbaxy, right? So companies are acquiring another company to use the rights to access the formula, to access the patent, right? So in this case, first of all, for example, the A Limited is acquiring B Limited. A Limited has acquired B Limited, right? So A Limited is paying 100 crore as a part of the consideration of B Limited. And the net assets value of B Limited is only 60 crores. So the differential is 40 crores. The differential is 40 crores. Now you tell me why A Limited, if the tangible net worth or if the value of the tangible assets of B Limited is 60 crores, then why A Limited will pay 40 crores extra? Why A Limited will pay 40 crores extra? Tell me. Why A Limited will pay 40 crores extra? Because A Limited is looking into some synergy. A Limited is looking into some future economic benefit, because this B Limited has some future contracts, right, which will give some future economic benefit, because B Limited has some goodwill which B Limited has not capitalized. Why? Because B Limited internally generated goodwill cannot be capitalized, right? So but A Limited is paying extra because A Limited knows that this is having a brand name. While acquiring B Limited, I will have more future economic benefit. I will have access to some intangible asset. I will have access to the customer base. I will have access to the government contracts, right? So that is why A Limited is paying extra to B Limited. So standard says that when you read Ind AS 103 business combination standard, it says that if there is an extra payment, that extra payment has to be evaluated for a separate intangible asset. That apart from goodwill, if there is any intangible asset for which the entity is paying extra, that intangible asset has to be recognized separately. Okay, because this is not a case of internally generated. This is a case of actually payment of the intangible asset, because the entity is paying 100 crore, and for sure, why entity will pay the extra 40 crores? The entity will pay extra 40 crores for some future inherent benefits, for some future economic benefits in terms of some intangible assets, right? So now the question arises, sir, A Limited has paid 100 and A Limited has paid extra this 40 crores. So whatever intangible asset which will be there, so at what value these intangible asset will be recognized? There is no cost for these intangible asset. The intangible asset has to be recognized at fair value, right? So in case of a merger and acquisition, in case of business acquisition, there is no concept of cost. What is the cost? Cost is fair value at the acquisition date. Fair value at the acquisition date, right? So we'll understand this concept with the help of a case study. Jay is asking, sir, the deferred consideration, will we recognize interest expense also? Yes, Jay, you have to recognize interest expense also. For example, in this case, what will the accounting entry? Interest expense account debit to vendor account or creditor account, right? So the difference between 363 and 4 lakh will go to the interest expense. Yes, let's solve this case study for business combination. On 31st March 2001, Earth India Limited paid rupees 50 lakh for 100% interest in Sun India Limited, right? At that date, Sun Limited net assets had a fair value of rupees 30, right? Earth India paid 50 lakh rupees for 100% interest in Sun India. So they are acquiring this subsidiary. They are paying 50 lakh rupees. And at that date, the net assets value is only 30 lakh rupees. It means they are paying 20 lakh rupees extra. So please tell me, for tangible assets, the fair value is 30 lakh rupees. Even the tangible assets have been fair value. For example, 30 years back, they have purchased a land. This Sun India purchased land 30 years back. And the land is running into the cost model. And 30 years back, they have purchased this land at, let's say, 10 lakh rupees. And today the value is 10 crore rupees. So they have already considered the fair value of all the tangible assets. And after considering the fair value of all the tangible assets, the fair value comes out at 30 lakh rupees. But still, Earth India is paying 50 lakh. 20 lakh rupees over and above to the fair value of the tangible assets, right? To the fair value of the tangible assets. Now the question arises, why? It means there is some intangible asset which this company is foreseeing, which this company is looking at, right? There is some intangible asset. So some information is given here. In addition, Sun Limited also held the following rights. trademark named Grand. There is a trademark. And what is the name of the trademark? The name of the trademark is Grand, right? Valued at rupees 1,80,000 using a discounted cash flow technique. Of course, you have to get the valuation done for these intangible assets. So there is a trademark. The name of the trademark is Grand, and it was valued at 1,80,000 rupees using some valuation technique, right? Which is a discounted cash flow technique, DCF method. The company is also having a sole distribution right to an electronic product. The company will have a sole distribution right to an electronic product, the future cash flow from which are estimated to be 1,50,000 per annum for the next 6 years, right? So this company, Sun India, has a sole distribution right. No one else can sell that product into that market. They have a sole distribution right, and of course, with the sole distribution right, this Earth India is forcing some future economic benefit. Okay, and this sole distribution right is for 6 years. And what is the value for this? 1,50,000 every year for 6 years. They have get it fair valued, and the fair value is 1,50,000 per annum for 6 years, right? What is the discount rate? 10% is considered as an appropriate discount rate. 10% is considered as an appropriate discount rate, right? And 6 year 10% annuity factor is 4.36. It means when I multiply 1,50,000 with 4.36, it gives me the fair value of this sole distribution right intangible asset, right? Calculate goodwill and other intangible asset arising on acquisition. So first of all, the total money is 50 lakh rupees. Intangible asset is 30 lakh rupees. Remaining amount is 20 lakh rupees. So out of 20 lakh rupees, there is one trademark which we have to recognize. The cost is 1,80,000 rupees. There is one more intangible asset, sole distribution right, which we need to recognize. The cost is, I mean to say, the fair value is 150 multiplied by 4.36. If any balance which will remain, so company has to recognize goodwill for that particular balance, right? I think we all are on the same page. We all are on the same page, guys. Yeah. So purchase consideration is 50 lakh rupees. Net asset acquired is 30 lakh rupees. Trademark is 180. And value of the distribution right is 150 multiplied by 4.36 comes out to 654. The total is 3834. And the balancing figure is goodwill. The balancing figure is goodwill. Goodwill arising on acquisition is 11,66,000. I hope it is clear to all of you. I hope it is clear. I will just take a pause for 15 seconds and please ask if you have any query. So the students who are watching this video live, they can ask the queries, and of course I'll reply to those queries. I will be happy to respond to those queries. Any doubt? Yeah. I hope it is clear to everyone. Yeah. Let's discuss these case studies from Institute study material as well. If you see example number 2 on separate acquisition, Jupiter Limited acquires new energy efficient technology that will significantly reduce its energy cost for manufacturing. Cost of new solar technology. So that this is a cost of 10 lakh rupees. Of course, it has to be capitalized as per Ind AS 38. Trade discount. So trade discount needs to be reduced. Training course. I have told you that training course is not going to be capitalized. Initial testing cost. Of course, cost of testing is going to be capitalized. Losses incurred while other part of plants shut down during the testing and training. There are some abnormal losses. So abnormal losses also not form part of your cost of intangible asset. And hence, out of 10,10,000 rupees, only 9,35,000 rupees has formed part of the cost of the intangible asset when it has been separately acquired. So Vidula, trademark has to be taken at discounted value technique of 180,000, not at fair value. So this discounted cash flow technique is also a technique for arriving at a fair value, right? So if you read Ind AS 113, there are a lot of valuation techniques. So how to arrive at fair value? So if you see the fair valuation of a share price, so how this valuation of share price will go? Black-Scholes model, Modi-Gilani-Miller model, right? Discounted cash flow technique model. So this is a valuation technique, right? So the fair value has been arrived by the valuation technique. Even though for sole distribution right, we have what we have done. We have also discounted that every year we will receive 1,50,000 rupees over a 6-year period. So it should be 9 lakh rupees, but we have not recognized it at 9 lakh rupees. We have recognized it as 6,54,000, right? So this discounted cash flow technique is also a fair valuation technique, right? Is it clear? I hope it is clear to everyone. Yeah. So this case study we have done, Winners Private Limited, 87,000. This we have done. Acquisition as a part of business combination, this we have done. This case study we have completed. Yeah. Okay. Let's move to the next concept. Acquired by way of a government grant. The third mode of acquisition. In case of a third mode of acquisition, when the asset is acquired by way of a government grant, right? For example, if government is providing some licenses, some rights free of cost, right? For example, government is saying that a company that please install your plant in a remote area and we will give you free mining rights, right? We will give you free mining rights. Okay. So friends, in this case, if a government is providing an intangible asset free of cost or for nominal consideration by way of a government grant, for example, airport lending rights. Like if you see these big companies, for example, Jindal Steel Power Limited. So Jindal Steel Power Limited has some airport lending rights near Angul. Okay, Angul is a area in Chhattisgarh. It's a remote area. So government has given them some airport lending rights. So whenever your craft will come, your aircraft will come, your helicopter will come. Okay. So we will not charge anything for lending your helicopter into this particular aviation place, right? Into this airport. So when government is giving free of cost airport lending right or at a concessional rate, import licenses, quota, or right to access other restricted resources, it may be acquired either free of cost or at a nominal value from the government. So standard says that in case the government is providing free of cost or government is providing at a concessional rate, so the first thing is recognize intangible asset and grant at fair value. Intangible asset and grant at fair value, right? What will be the accounting entry? So let me share here in my Excel sheet. Yeah. We are discussing mode of acquisition, right? And while discussing the mode of acquisition, we have covered the concept of separate acquisition. We have covered the concept of cost in separate acquisition. Okay. And for detailed explanation, you have to refer the PPT, because I have taught you from PPT this particular concept. Coming to the concept of business combination, again, the concept of business combination also I have taught you through PPT. Coming to the concept of government grant, intangible asset acquired by way of government grant, right? So if the intangible asset is acquired by way of government grant, when I say government grant, I mean to say either free of cost or at a concessional price. either free of cost or at a concessional price. Either free of cost or at a concessional price, right? In this case, standard says that. In this case, standard says that. Option 1. Recognize both. That is, recognize government grant and intangible assets at fair value. For example, the government has provided free mining rights to the company for 5 years. The fair value of such rights is rupees 5 lakh. So what is the accounting entry? The accounting entry would be mining rights, intangible asset account debit. Mining rights intangible asset account debit to deferred government grant, as a liability, right? 5 lakh. Option number 2. Sir, but what happens with this mining right and this government grant? What is that? What is the separate accounting entry? So this is at the time of acquiring rights. But what is the accounting entry at the year end? At the year end, the accounting entry is amortization account debit. To accumulated amortization or to mining rights. Right? To mining rights. And what is the amount? If life is 5 years, 5 lakh rupees is there, so 5 lakh divided by 5. So this intangible asset will be amortized over a period of 5 years, right? Second entry would be this deferred government grant debit. This deferred government grant debit to other income. This deferred government grant liability will be credited. Okay, they will be debited and other income will be credited over a period of 5 years. 5 lakh divided by 5. So since you have seen that this mining rights have been acquired free of cost, there should not be any cost. But every year, so in the first year, we have recognized an asset, and we have recognized a liability as well, right? So balance sheet is telling there is no change in the net assets, right? So my balance sheet is telling, right? And if I see every year my income and expense, my expense is 1 lakh rupees, but my income is also 1 lakh rupees. If I got this asset free of cost, I should not have incurred any expense, right? And you can see that there is no any expense. It becomes 0. 1 lakh expense, 1 lakh income, right? So this is the first option. This is the first way of presenting the thing. This is option number 2. Option number 2 is recognize the intangible asset. Recognize intangible asset at nominal cost. Plus directly attributable cost, if any. Plus directly attributable cost, if any. For example, The government has given free mining rights to the company, but will charge Rupees 1 lakh for its registration. Right? In this case, going by the option number 2, you have option number 1 as well, right? But going by the option number 2, so what you can do, what is the nominal cost? The nominal cost is 1 rupee. Let's say the nominal cost is 0. So in this case, what value intangible asset can be recognized? Intangible asset can be recognized. Intangible asset account debit. So of course, it is a mining right. So mining right, intangible asset account debit, right? By how much amount? 1 lakh rupees. This company is incurring a cost. So 1 lakh rupees to bank account, right? 1 lakh. So the first option is recognize the asset and the grant both at fair value. The second concept is you can recognize your intangible asset actually at a value which you have paid for. Sir, we have paid nothing. Then 1 rupee. Okay, 1 rupee, 100 rupee, whatever you feel good. Okay. If you have paid nothing, then mining rights intangible asset account debit to other income account 1 rupee. Right? Is it clear? Is it clear to all of you? Yeah. Yeah, good. So friends, I hope this concept is clear to all of you. Let me know if you have any problem in understanding this concept. Please let me know. No? Yeah. So let's move to my PowerPoint presentation. So we have discussed this concept of acquired by way of government grant. In accordance with Ind AS 20, you need to record both intangible asset and you need to record intangible asset and grant at fair value, right? Or recognize the asset initially at nominal amount plus any expenditure that is directly attributable to preparing the asset for its intended use, right? Coming to the exchange of assets, guys, what we have discussed in case of exchange of assets. In case of exchange of assets, we have discussed that if an entity is acquiring an asset, acquiring an intangible asset, in consideration of providing some other non-monetary asset or in combination of providing some non-monetary asset plus cash, right? So standard says that if the transaction is having a commercial substance, if the transaction is not having a commercial substance, then you have to recognize the intangible asset at cost. When I say cost, it means cost of the asset which you are surrendering, the WDV of the asset which you are surrendering, right? So your cost of the intangible asset is equal to WDV of the asset surrendered, right? Plus cash if you have paid any. Second, if the fair values cannot be determined either for the fair value of the asset surrendered or the fair value of the asset acquired, if this cannot be determined, then again you have to go by the WDV of the asset surrendered, because if the asset is there in your books of account, the WDV will be there, right? But if the transaction is having a commercial substance, then you have to give the first weightage to the fair value of the asset surrendered, because this is something which you are paying as a consideration. So first weightage you are going to provide to fair value of asset surrender, like in property, plant, and equipment. What is the first weightage? The first weightage is for the fair value of asset given up. Fair value of asset given up. What is the second weightage? Fair value of asset. If fair value of asset given up cannot be identified reliably, then you have to go for fair value of asset acquired. What is the first priority? The first priority is you have to look for, if you got the fair value of asset surrender, fair value of asset given up, that is the first priority. If you're not able to identify or determine the fair value of asset given up, then you have to go for the fair value of the asset acquired. Then you have to go for the fair value of asset acquired. Sir, if both the fair values are not there, then you have to go by the WDV of the asset surrender, WDV of the asset given. You have to go by that, right? Is it clear? Yeah. Yes. So friends, let's do a case study from Ind AS 38 intangible assets. Study material on exchange of assets, right? I hope it is clear to everyone. I hope it is clear to everyone, guys. Sairam, so so student has some query. Let me address those queries for government grant. Vidula is asking, sir, please explain how mining rights intangible asset credit will be income and not decrease in the intangible asset. Vidula, in option number 1, okay, in option number 1, what you are doing, you have recognized an intangible asset. You have recognized an intangible asset, right? So you have recognized an intangible asset. In this case, if you have recognized an intangible asset, you have to amortize an intangible asset. So when you amortize, your intangible asset will be credited. So when your intangible asset will be credited, it will keep on decreasing. When your asset will be credited, it will be decreasing, right? It will be in the decreasing trend, right? So whenever you depreciate, whenever you amortize, your asset value will go down. So amortization expense account debit to intangible asset account, it will lead to incur a expense, and it will lead to decrease in the value of the asset, right? So amortization expense account debit to mining rights intangible assets, right? The second one is, since we have also recognized a deferred government grant, we have recognized a government grant because we have recognized at fair value. So of course, this government grant is also required to be amortized over a period of time. So since this government grant is a liability, so you have to debit the liability and you have to credit the income. Clear? I hope it is clear to all of you. Yeah. So Tanushree is asking, sir, if no nominal charges, then no entry as per option number 2. Yes, it is as per option number 2, it is 1 rupee entry. Because since you got an intangible asset, just you have to track an intangible asset, right? So you can pass an accounting entry, mining right intangible asset account debit, 1 rupee, to other income 1 rupee, right? So you can do that. So coming to Tanushree, sir, please explain option number 2 once again. So Tanushree, the first option was recognize asset and recognize. So first option was recognize asset and recognize government grant at fair value, right? That was the first option. Second option was recognize intangible asset at nominal value. Okay, at nominal value. So when you say nominal value, I mean to say 1 rupee, right? Plus any cost, any expense which you have incurred, any cost or any expense which you have incurred for that, right? Which you have incurred for that. Clear? So in this case, in my example, the government has given this right free of cost, but the government is only charging 1 lakh rupees as a registration charge. So this registration charges is a directly attributable cost which has to be added to the nominal value of the asset. So I have not considered 1 rupee here because there is 1 lakh rupees of cost. So that is why I have not covered this 1 rupee here, right? If nothing should be there, then, for example, there is no registration charges. There is no registration charges. Then at what value intangible asset will recognize? In this case, intangible asset will be recognized at 1 rupee, and the credit will not be the bank account because nothing has been paid. The credit will be other income. Okay, 1 rupee. I hope it is clear to all of you now. I hope it is clear to all of you. Sairam, I hope it is clear to you. Tanushree, Jay, Vidula, I appreciate if you will respond that yes, it is clear. Srinidhi is saying, sir, exchange of asset in intangible asset is same as PP. Yes, Srinidhi, it is same as property, plant and equipment. Yeah. Right. So let's do the case study on exchange of assets. Sun Limited acquired a software from Earth Limited in exchange for telecom license. The telecom license is carried at 5 lakh rupees in the books of Sun Limited, right? So Sun Limited is a company and Sun Limited is acquiring a software. So what is the asset acquired? Asset acquired is software. And what is the asset surrender? The asset surrender is telecom license. So remember, Sun Limited is a company which is acquiring a software. So asset acquired is software. Asset given up is telecom license. The telecom license is carried at 5 lakh rupees in the books of Sun Limited. And WDV of the asset given up is 5 lakh. The software is carried at 10,000 in the books of Earth Limited, which is not the fair value. So I'm least concerned about the values in the books of, Earth Limited. I'm only talking about Sun Limited as of now, right? Sun Limited. Advise journal entries in the following situation in the book of Sun Limited and Earth Limited. So let's only talk about Sun Limited here, right? Only talk about Sun Limited. The first situation is fair value of software is 5,20,000. So what is the fair value of the asset acquired? Fair value of the asset acquired is 5,20,000. And what is the fair value of asset given up? The fair value of the asset given up is 5 lakh rupees. So please tell me, in the books of Sun Limited, the fair value of asset acquired is given, which is 5,20,000. The fair value of asset surrender is given, which is 5 lakh rupees. So tell me, at what value you will recognize the intangible asset? At what value you will recognize the software? Is it at what is the first priority? Fair value of asset surrender. So in the books of Sun Limited, in situation number 1, what is the fair value of asset surrender? What is the fair value of asset surrender? Yes, the fair value of asset surrender is 5 lakh rupees. So what we will do, we will recognize software at 5 lakh rupees in the books of Sun Limited. Software account debit 5 lakh rupees. 2, telecom license. The WDV of the software is also 5 lakh rupees. So I have to credit with the WDV. But the fair value and WDV is the same amount. And hence in this case, there will not be any profit. Okay, there will not be any profit or loss, right? So to profit on exchange will be 0, right? So profit on exchange will be 0. Clear? Is it clear? I hope it is clear to everyone, guys. You have to credit whatever is there in your books of accounts, right? And it is 5 lakh rupees. So in this question, the WDV and the fair value is same. So Rindri, why you are saying 5.20 lakhs? What is the first priority? The first priority is fair value of asset surrender. And what is the fair value of asset surrender? The fair value of telecom license which is going to be surrendered is 5 lakh rupees. Situation number 2, the fair value of software is not measurable. However, telecom license is transacted by another company at 4,90,000. See, the fair value of asset acquired is not given, doesn't matter. Our first priority is fair value of asset surrender. But the fair value of the asset surrender is given. It is 4,90,000 in situation number 2. It is 4,90,000. Tell me at what value you have to recognize the software in the books of Sun Limited. In the books of Sun Limited, you have to recognize software for 4,90,000. And you have to credit telecom license. What is the carrying value of telecom license? 5 lakh. So in this case, you will have a loss on exchange for 10 crores. For 10, what is this 10? For 10,000, right? For 10,000. Is it clear? Is it clear? Is it clear? Or should I again repeat this example? Yeah. Third example. Neither fair value of software nor telecom license could be reliably reached. The fair values of telecom license asset surrender is not there. The fair, then we have to see the fair value of asset acquired. Even though the fair value of asset acquired is also not there, then what to do? In that case, we have the last resort, which is the carrying value of the asset surrender, which is coming in the books of accounts, right? Software account debit to telecom license, which is 5 lakh, right? Software account debit to telecom license 5 lakh. Clear? Is it clear? There is no profit, no loss. Why? Because whatever is the carrying value in the books of accounts, you have recognized the asset acquired at that value. Is it clear? Vidula, why you are saying 5,20,000? There are three different situations. There are three different situations. Yeah. So in the first situation, we do have fair value of asset acquired and fair value of asset surrender. In that case, we have gone with the first priority of fair value of asset surrender. In the second situation, the fair value of asset acquired was not there, but the fair value of asset surrender was there. So again, our first priority was fair value of asset surrender. In the third situation, neither of the fair value was there. So we have gone with the fair value of asset, carrying value or WDV of the asset given up, right? I hope it is clear to everyone. And likewise, you are also required to recognize in the books of Earth Limited, because Earth Limited is also exchanging the telecom license in consideration of software. Sun Limited is exchanging telecom license. Sun Limited is acquiring software in exchange of telecom license. Earth Limited is acquiring telecom license in exchange of software. So both are acquiring intangible asset in exchange of assets, right? So you have to do this particular exercise for Earth Limited as well. Just keep in mind these 2-3 considerations. First, you have to apply in the first priority, you have to pick fair value of asset surrender. If it is not there, then you have to come to the fair value of asset acquired. If that is also not there, then you have to take the WDV of the asset surrender, which is coming in the books of accounts. I hope it is clear to you guys now. I hope it is clear to all of you. Yeah. Tanusri is saying the third situation is not clear. So Tanusri, in third situation, the fair value of software and the fair value of telecom license is not given, right? It is not there. Then at what value you will debit your software? Of course, you have surrendered your telecom license, so you have to credit the telecom license. At what value you will credit the telecom license? Of course, you have to credit the telecom license at a value or at which it is coming in your books of accounts. The carrying value is 5 lakh rupees. So you have to credit telecom license 5 lakh. And you have to debit the software with this value only. Have to debit the software with this value only. Software debit 5 lakh rupees, telecom license 5 lakh. So what you have done, you have recognized your software at a carrying value of the telecom license, which is a carrying value of the asset surrender, right? Why? Because you have to go by book value, because you don't have the fair values. If you have either of the fair values, you have applied that, but you don't have any fair values, then what to do? Then we have to do this only. Right? So what is the first priority? The first priority is fair value of asset surrender. What is the second priority? Fair value of asset acquired. What is the third priority? WDV of asset surrender. Fantastic, Vidula. These are the priorities. Please remember, these are the priorities. Don't get confused with the 1, 2, 3, these situations of this particular case study. Just remember the concept. First, you need to apply, you need to check, is there any fair value of asset given up? Yes, please apply. If no, then you need to see whether fair value of asset acquired is there. Yes, go for that. If no, then you have to see the WDV of asset surrendered, right? Right? Clear? I hope it is clear to all of you. Clear, friends? Yes, no? Yeah, good. So in case of exchange of assets, let me put in Excel file as well, because you will get Excel file, exchange of assets. If the transaction is having commercial substance, then asset acquired will be recognized at a value in the descending order. Right. The first one is fair value of asset given up. Okay. If the fair value of the asset given up is there, apply this value. For example, if the fair value of asset given up is there, so yes, it is there. Yes. Okay. Just a minute. Yes. Then apply, then recognize asset acquired at fair value of asset given up. Fair value of asset given up. For example, it comes out as a no. Fair value of asset given up, no. Then you have to go by fair value of asset acquired. If it is there, for example, if fair value of asset acquired is there, answer is yes. Then recognize asset acquired at fair value of asset acquired, right? For example, it is also not there. No. In that case, WDV of the asset surrendered, this will always be there because this is the book value surrender. Public given up. Yeah. If this is there, then recognize asset acquired at WDV of the asset surrender. At WDV of asset given up. I hope it is clear to all of you now, guys. I hope it is clear to all of you. Yeah. Clear? So friends, today, let's move to the presentation again. Today we have started our journey with the objective of the standard, right? Then we covered the scope part, right? Then we have covered the definition of asset and intangible asset. Then we have covered the meaning of identifiability, control, future economic benefit, right? We have covered the recognition criteria. Okay, the two criteria are same. The third one is it should meet the definition of intangible asset. We have covered a lot of mode of acquisition, like we have covered what happens in case of separate acquisition, what is the cost, what happens in case of business combination, what happens in case of government grant, what happens in case of exchange of asset, what happens in case of internally generated goodwill. Internally generated goodwill is not allowed to be capitalized in the books of accounts. So last concept of mode of acquisition we will discuss in the next class, which is already scheduled on 19th of March, Saturday morning, right? So we have covered these aspects. Okay, these 4 aspects of mode of acquisition, these 5 aspects of mode of acquisition. Okay, in the next class we will discuss the next concept. So thank you so much, guys. Let me know if you have any query. Otherwise, we will move on. Let me know if you have any query. Otherwise, we'll conclude the class today. I'll just take a 15 seconds pause and I'll wait for the query. If you don't have any query, then I'll conclude the class. So thank you so much, guys. I have replied or responded to all your queries. Thank you so much. And let me conclude the session now. So stay healthy, stay happy. And in the next class, so this Ind AS 38 is also an agenda for 2 classes. And in the next class, we will conclude and we will complete Ind AS 38. Right. Thank you so much.
Recording stopped.